Hello and welcome to Trading with the Trend. My name is James Boyd. We welcome you here today. We also got Brent Moores in the chat. We welcome him. And just real quick as we get going, want to just kind of do a quick roll call. Chris B, Luke, Naresh, Life in the Fast Lane, Luke, WW or Will W, GH, okay, Gary, and Bill. Welcome to all. And just real quick, this class is Trading the Trend. We always like to ask the question, what trends are you riding? Doesn't matter if the market's going up, unless the investor has an allocation to that trend. So very important we talk about the trend. Now, the trends we talk about might be 2 to 3 weeks, 2 to 3 days to 2 to 3 weeks, which we'll call a short-term trend, 2 to 3 weeks to 2 to 3 months, intermediate trend, and longer term, anything longer than that. Now, just real quick as we get started. Now, by the way, we'll also look at doing examples of all different types of trends. It doesn't have to just be a certain length or a target of time. Now, as we get started here today, remember that options, we'll talk about stocks, but if we bring up options, which we have some option examples, remember that options carry a high level of risk and are not suitable for all investors. The information here is provided for general informational purposes only, should not be considered an individualized recommendation or endorsement of any particular security, a chart pattern, or investment strategy. So we might bring up a certain strategy and you might say, I don't do those strategies, but I would consider this. That's fine, okay? Think of it as the strategy as a shoe. For the paid money portfolio, it might fit. For your shoe or foot, it might not fit. So that's up to you to decide if it's something you would consider. Also remember that when we talk about investing, we will do that in the paid money software application for educational purposes. And also remember that investing involves risk, including loss of principal. Now, when we talk about short options like selling puts or selling calls, short options can be assigned at any time. You should have an understanding of what that really means and what the obligation is, regardless of the in the money amount. And then option Greeks measure sensitivity to something, okay? See the definitions. And also when we talk about examples, they are just that. Now remember, we have a full lineup of in-person events. If you go to schwab.com/events, you could see more detail about that. Up next in Anaheim, the 30th and 31st of this month. Oh, can't believe it's almost June. But it's wonderful, okay? We got the Miami Market Drive, June 13th, okay? And you're going to see that's a one-day event. They call those market drives. Joe Mazzola, Ben Watson, and others there. And also we're going to be in the market, doing a market drive in New York, June 28th, okay? That's at the Marriott Marquis. So join us. If you're a Schwab client, which you probably are, that's why you're here, you're going to notice that you can just go to that website right there and see a calendar listing for the whole entire year. Now, what I want to do just real quick is let's do a fast fire on indexes and sectors. Then what I want to do is I want to talk about kind of fast forward a little bit upon what we talked about yesterday. Looking for a stock above the 10-period moving average. 2, looking for a stock, same thing, okay, looking for to see if that stock has maybe pulled back in the last 1 or 2 days. Red candles. And then third, is that stock starting to make a close higher day or a close above the high of the low day? Okay, I want to focus on that. We talked about 3 stocks yesterday that were kind of setting up for that. We talked about Apple, okay? The second one we actually talked about is BlackRock, and the third stock we actually talked about is QComp. I've got some others I'd like to take a look at, okay? Now, what we're trying to do is ingrain a practice, and why is the paper money account doing that, okay? And we'll kind of further that discussion here today. So first off, let's actually go ahead and take a quick look at the indexes. What I'd like to do is just pull this up on the list first, and that went black. There you go. Let me actually see something. Okay, there you go. Now, first off, we got an index list. I can't share this list, but you can make the list the same. The column headings are mine. You could actually find those column headings right on my X page. Now, just real quick, if we go to, let's say, the Dow, it's kind of interesting. Dow opened up a little softer, okay? It was down like 0.3%, 0.4%, and that's with UNH down again, okay? United Healthcare. Dow Jones sitting about 225, about 0.5% now to the positive. Now, you got to remember something, okay? If we go down 0.5%, that doesn't mean a bearish trend. That probably doesn't mean broken support. If we think like that, it's going to be very difficult to ride trends, okay? Fair? Okay, good. Now, the SPX, not that move. There it is. SPX, sorry, it's moving on us. SPX sitting right there, about 0.5%, about 28 points there. NASDAQ up 100 points, 0.5%. So they're all about 0.5%. Okay. Now, Russell up 7 points, 3%. Now, I want to kind of say something. I don't ever really say this on the Russell. The Russell 1000, which Kevin and I will talk about tomorrow morning on 9:30 a.m. Eastern when we talk about ETFs. Keep an eye on the Russell 1000. You know, there could be a play where if some investors feel like they're late and there could be a potential catch-up trade, it might be on the Russell 2000. The Russell 1000 has gone more in line with what the S&P has done, but could the Russell 2000 start to get a little mojo? Now, let's take a quick look at what these look like, okay? So I'm going to pull these up on the chart, and you're going to see that this is what it looks like. And what we really talked about quite a bit yesterday is that sometimes when we get down days, how long did we go down for? We went down for a day and then went right back up, hence a green candle. Went down for 1 day, went right back up after one down day. So we're defining down days is a red candle. How long did it go down for? It went down less than 3, strong momentum, okay? Now, if you look at this, went down for a day and then fired right back to the upside. What do we have? What have we done lately? Well, we've gone down for 2 days. And what type of candles on the right-hand side? Well, probably wouldn't have to get very far into candlestick analyses. That's a bullish engulfing. Now, this has really been our trend line over time. And if the price, okay, P is greater than S, or the support level, you probably are going to have potentially shallow pullbacks. So I should say this a short pullback. When I say short, I'm talking about duration of time, okay? And when I also talk about shallow, I'm really also talking about maybe where the stock doesn't really pull back that much, and maybe that stock, you know, is kind of showing that investors are trying to buy any dip just to try to get in and ride the trend. Now, it also does that where it teases investors. Some investors say, I'm going to buy here, I'm going to buy here, I'm going to buy here, I'm going to buy here. It never lets me get in. Well, you got to understand something. It's like real estate. If you're in a hot real estate market and you lowball someone in terms of the price of the house, well, they're probably not even going to respond to your offer. Same idea with the stocks, okay? So if we take a look at the Dow Jones, what we see in this case is still quite strong. That next level is going to be about, if it could, 427 and change. And if we go back to the S&P just real quick, the SPX, Lisa brought up the example yesterday, and we kind of made maybe a comment that might have not sat well with really some other people. We kind of talked about maybe the VIX doing a bullish divergence yesterday. And we talked about, hey, keeping an eye on it, yes. But also we kind of said that, hey, and this is why we talked about it yesterday. Yesterday we saw really a red candle where the open and the close of the body of the candle on the SPX was very thin. That's great because really it's like a neutral day, but the price held above the breakout level. Today, it opens up we open up lower. The intraday low was pretty much at the open. And at the end of the day, if we're almost there, we're pretty much actually trading near the high. Now, could this also be identified as a potential support bounce? Yes or no? I mean, does it have to pull back for a week or two to really be a support bounce? Or could it just pull back for 1 day, do a bullish engulfing, and then bounce to the upside? And the answer is the latter. It doesn't have to pull back for a week or two. It doesn't have to pull back for 3 weeks. It can pull back for 1 or 2 days and bounce to the upside, and that was the bounce, okay? Now, the comment that we actually made yesterday is, you know, there could be a path of least resistance where all of a sudden we might try to go right back up to this prior high. Now, I'm even going to say something even more egregious than I said yesterday. It wouldn't be unthinkable that the SPX even trades at a high, okay? At a high, and that high being 61.47. Some investors might be forecasting that. Doesn't mean they're right, But if we kind of talk about this paper money count, maybe the paper money count is actually looking for the SPX to get above that high. What would give us the indication potentially that that might occur? Go back to Monday, what we talked about, some of the underlying keys to look for, and some of those keys have been very strong. Speaking of one of the keys that we talked about was the NASDAQ itself. That has been the horse that has really led to the upside. And what you're going to notice on the NASDAQ, we haven't even seen a pullback to the breakout level. Now, is that bad? No. It's not letting those people get in who want to try to buy on the dip. It's annoying, isn't it? So when you're like saying, here I am with a basket in my hand, I swear I'm going to buy it if it comes down to that level, I swear. And it never comes down to that level, okay? So in the shorter term. So what we kind of see right here is, it's not, if there are people selling, there's someone on the opposite side buying it, and it's not letting the price fall, okay? Now, I want to go back to the SPX for just a moment. When we actually kind of saw this little, it didn't even really pull back. It kind of drifted sideways. And a lot of times you'll get that. We talked about that in the last couple of days, bull flagging versus bull flat. Flat is when the price kind of drifts sideways. If you kind of consolidate sideways and you don't even get red candles, the trend is stronger than maybe we think it is, okay? Now, go back to just real quick, the sectors, and then we're going to look at some examples and hit questions. Now, I do want to give a heads up. In the last 36 hours, I've been sick. Fever, stomach ache, whole 9 yards. So I can do anything for about 45 minutes. But forgive me if I mentally, I'm as clear as ever. As I usually am. Okay. But man, I've been sick, up half the night. So here we go. Now, if we take a look at this, I just want to kind of get a sense of what sectors are. Now, the comment that Lisa said, and I want to link this back to today's comment. Sometimes when the VIX is low and diverging, some investors say, look, I'm going to try to buy some utility stocks, staple stocks, real estate stocks. Why? Well, because if the market pulls back, those tend to be the area in the shorter term that might be buoyed a little bit by they have an income component of dividends. Dividends are not always guaranteed. They could raise the dividend, they could cut the dividend, they could keep the dividend flat. That is a risk of the dividend stocks. They could change their dividend policy. Now, if you take a look at this, so that's kind of something I want us to keep an eye on. Do utilities start to get a bid? Meaning, do people start to buy them? Do people start to buy staple stocks? Do they start to buy, let's say, real estate stocks? But the area that has been unbelievably bad has been healthcare, which did pound another fresh new low. And let's start here just briefly. When you look at the IXV, that was a fresh low. The United Healthcare, which is a big chunk of that, really has not done, that's the sector that we're looking at. And United Healthcare, who now is actually underneath, and this is per the news, not per James Boyd, but now there's questions whether there's been Medicare fraud. Oh my gosh, when you thought it couldn't get any worse, okay? CEO leaves. Now you actually, as of yesterday afternoon, potential fraud, okay? And now what you're gonna see is, man, wow. Now the opposite of that has been Cardinal Health, okay? Thank heavens there's different stocks and not just one stock. But that area has been brutal from regulation and also at the same time from United Healthcare being a big percentage of what the healthcare does. And by the way, it's also in the Dow. Now, what I want to do is I want to also go back to a couple stocks. I want to bring up Apple for just a moment, okay? Now, Apple was one of the stocks we talked about. Now, I'm not going to say it's the best looking inverse head and shoulders. I'm not going to say that. But it kind of has something like that where it went up and then kind of maybe had a shoulder right there. We can kind of even say it went a little bit further and pulled back. I think what we could say is we had a higher low here, okay, compared to there. And then we actually had a higher low there compared to here. Fair? Okay. Now, if we look also underneath, there has been a little crossover. Okay, now the crossover might not matter as much unless we're really above the yellow line. And I'm going to put a little X on that so we can see the line that we're watching now. Now, remember what the investor is looking for is they're looking for price above the 10-period moving average. Why? Well, because that probably is signifying at that point in time momentum. Now, what you're now going to also notice is when we get the red candles, okay, red candles. So let me kind of say something. I'm going to put this number one, price above the 10-day moving average. And I'm also going to say a short-term high. Okay, short-term high, meaning we just made a high just recently. We did. Second, when we also get the red candles, are the red candles like 1, 2, 3 days or less? I'm going to put or L. Okay, now from there, we're looking to see is can we get a CHG close higher gap, which we had a class on that recently, or a hold. Okay, and what you're now going to see is we talked about this. And what I'm going to do in this example is we talked about a buy stop if we get at or above about 214-ish and change. But what if the investor says, James, no, I'm going to try to buy right on this close higher day. Yeah, we haven't gapped to the upside. Yeah, we haven't holded yet, but I want to buy a little bit closer to support. Does that make sense? All right. So we talked about the buy stop yesterday, and it's waiting to be filled. But what if the investor says, no, I want to get in now? And why would someone try to get in now? They're trying to get in closer to the support area. Now, here's the deal. No one said they had to buy the shares, and we bought the stock yesterday. At least we have a pending order. But wonder if someone says, James, I want to try to time that trade with like a long call vertical. And what I want to do is see if I can't trade a bounce setup. We're going to right click. We're going to go to the June expiration. And what we're going to do is we're going to look at the at the money call. You got the 210, 875, 880. Okay, right click on this 880, buy. We're going to go right to vertical. Now, let's also kind of say that I was a nervous investor. Okay, and I said comments like, well, every day, we can get different news about the market. We don't know what it's going to do. And then we would say back, well, you could say that any day. Okay, you could say that any day. I don't know why that's different now. Okay, you could have news at any time. Okay, that's why the investor is trying to find companies that actually have a greater inelastic or greater, I should say it like this, a greater chance that they can absorb news and still go up. Okay, now it doesn't mean that they will, but a greater probability, meaning it's backed by trend, it's backed by fundamentals, it's backed by demand, and so on and so on and so on. Institutional interest, volume, and so on. 210, 215, debit 273. So if we lost everything, given a vertical, it's going to be 273 plus the commission. So trade number one that we're going to do here in the paper money account is we're going to go right to the paper money account, and we're going to do this in both accounts, okay? Now, I kind of always think, someone can talk about the market all they want. Talk. At the end of the day, I want to see with my own eyes. I'm not from Missouri, the show me state, but I live close to Missouri, okay? We're going to do the 210, 215, 273 debit, and what we're going to do is we're going to do one contract in the margin account, okay, given the max loss, and we're going to do 3 contracts in the IRA. So it's really dependent upon that buying power effect. That's the debit per contract. So if we did one contract in the margin account, max loss, debit, 273, given the vertical. 3 there, and it's really 273 times 3 that gets us to 819. Okay, so there it is. So we don't, in our examples, I don't show that in this account, we'd only do this, in this account. Nah, it's just different quantities, okay? Now, what we're going to go ahead and do is say, send the order, and we're going to actually see if that trade could fill. Now, we also have to remember is just because we put the order in doesn't mean it fills We're going to give it the first 2-3 minutes and then see if it can fill. Okay. Now, I also want to go back to another one that kind of also relates to a current example that we have now. And that current, I'll say, so Apple does fill. We see that right there. And what I want to do is I want to go down to the IRA for just a second. I want to bring up just real quick the IBM stock chart. And what do you see on this stock chart? Okay. Now, this has been an example that we have. It's in the IRA account. What do you see on the chart? Now, kind of interesting, when the stock broke diagonal, we could say that almost on the same day it broke horizontal. And what did it do? It went from 242, it smashed its way up to 254, and there were some people that said, I'm going to sell right at horizontal. Now, what we have to remember is not all of us have the same exits. I like to think of this like we're taking a bus, okay? Someone gets on the bus, they're just going to go 2 stops down, and they're getting out. But if we get on the bus and we say, hey, look, our stop is 4 stops down, or our target is higher than someone else's. Well, yeah, those shorter term traders get out at the second stop and they sell and they push it down. But those who are also now getting on decide, you know, I'm going to get in and I'm going to target that 264. Now, how come people aren't selling? Or if they are selling, how come we don't really see the red candles yet? Now, could some people be saying, look, I'm not going to sell here. I'm actually going to think it's going to go potentially even higher. Now, I also want to just rub this in a little bit, how that tilted up W pattern, I think we probably saw a couple hundred of those. Fair to say. I don't even think that's even embellishing the story. The tilted up W, kind of with that higher low, relative to low, I don't know. If you've seen those, some investors like those. They like the bull flags, they like the tilted up W's and so on. But boy, tried and true. This one, they don't always work, but once it got above the middle of the W, it really never looked back, okay? It's not always going to happen like that, but boy, this one has been quite interesting. Now, if we go back to this, let's go back to the 3-year weekly chart. This is what we see on the weekly chart. So it's kind of a little hard because when we go back to the position, what position do we have? Well, we have IBM. Okay, we have a positive delta, which means a bullish trade, and it's sitting at a 50% return of the maximum gain. The position is a long call vertical. Now, for some investors, if they can get 50% and still have more than 20 days remaining, that's like getting 80%, okay, with that many days left, okay? So what the investor might do is they might say, hey, look, this is a 245, 250. Maybe they might roll up the strikes, okay? Now, what I'm going to do is that's what we're going to show. We're going to try to grab this $285 and then enter in a new position. Same expiration, just different strikes, okay? Now, what I'm going to do is going to right-click on that chart, create closing order, sell that. Now, we could just exit what we have, or we could just roll the position, okay? Roll it just means that it's going to show more rows than we have here. For simplicity, I like to get out of what we have in the paper money account as an example, and then just enter a new position for simplicity. Confirm send the order. The other reason why I like to do that is I like to see exactly what the fills are for just the individual spread, okay? Now, what we're going to do is, if we look at IBM, okay, and we say, okay, what's the at the money strike now? It's a 265, and the out of the money strike is 270. So all we're going to do is we're not going farther out in time. We're just kind of going up higher in strike, and we're going to go right-click on the 265, buy vertical. And now what you see in this case is you got a 258 debit. Now, I think that what we'd have to say is IBM is really not our daddy's IBM of the 80s, late 80s or early 90s. IBM, we'd have to kind of say that when you look at that trend, that trend has actually been quite strong. We have to say that kind of really had a breakout in late 23, and it's had a pretty strong trend over time. We go to the Analyze tab for just a second. Trends are not just technical. They can also be fundamental as well. And trend historically does not mean trend in the future. So a lot of times you just kind of like to get a gist in terms of what are their sales, what are their earnings, does it pay a dividend, and so on. But when we look at some of these numbers, they've actually been pretty consistent. Okay, now let me kind of make a point to this. Someone on X asked me, there was a couple people, okay, and they said, hey, what do you think of this stock? Now, I didn't respond to those questions, but I did look at them, and 0 out of 5 of them even had revenue numbers that were increasing over time. The majority of the stocks did not even have, or actually all the stocks did not even have 250,000 average volume, which probably said you don't even have any institutional investors. And I think 1 out of the 5 was profitable. So here, I just want to make sure we're making a crystal clear point. We're not going to buy anything, stocks or options, that is not something that has shown a history of profitability, and also something where there's been a trend of earnings, let alone a trend of just price, okay? We're talking about investing. We're talking about trying to find businesses that have been profitable and a leader in their space. This is not a lottery card, okay? If we buy a 14-cent stock to see what it's going to do, that is not even in the watch list criteria. So be very careful if that's kind of the avenue that you've gone down. It's not to say that those can't make money, but they are very speculative, and that's why they're priced at that price level. The same person that brings those up might say, I've had a trouble with a history of being consistent. They don't really have any consistency. So now, does that mean that a company that's been profitable can't go up and down? They can all go up and down. But the investor is trying to get companies that have more consistency and also holding power, that they can handle economic shocks like lately and still maybe have a greater potential chance to go up. That's very important, okay? Very important. Now, you can do what you want, okay? But I would not show that in a class, because I think most people are saying, James, I'm doing investing. I'm not trying to scout something in a 1 or 2 minute chart. And that goes back to what we talked about the other day anyway, which is what percent is really in the intermediate to longer term versus short term. And you need to be very careful. If you're saying, no, I do 100% in the short term in whatever in the next 2 or 3 days, and then complaining what happens in the first 2 or 3 days, then you're now going to realize why a lot of people don't bank their whole portfolio, the large part of it, in the next 2 to 3 days. Because anything can happen in the next 2 or 3 days. Okay, so we're trying to kind of have some time on our side that if there is some volatility, that things could work themselves out of the system like we've seen as of lately. So trade number 2, what we're going to do is we're going to take the 210. Let's go back to that. We're going to take the 265 on IBM and the 270, and we're just going to unlock this. Let me see where it is. It's at the debit of 260. Confirm and send the order. Okay. Now, what I want to do is also kind of go back and see if there's any questions. Now, the one thing I want to do is, so there's been, now we have it, let's go back to one of them that's been asked, Wiley. I saw a quick comment, Wiley, regarding Boeing, okay? Now, this is kind of interesting because Boeing, you know, they were anything but profitable. And this has been something that I've seen comments on, and it's been something that a lot of times that people, they struggle, okay, to understand this. So I'm going to try to try to give analogies, okay? But when we go back and look at the analyze, we go back and look at fundamentals, you take a look at this, and this has been anything but profitable. Now, what we have to understand is, let's say all of a sudden that the CEO, the last CEO was fired, okay? Fired. All right, now, let's say in 2024, the new CEO was hired. Now, what can sometimes happen in that situation is the current CEO could say, hey, our numbers have been where they are because it's been based upon the past leadership and their decisions. And now I'm just reporting on what those numbers were. Now, the new CEO, so there can be a lag in the fundamental data with the new CEO. Now, the CEO can make changes, and those changes can then affect the future fundamentals. Now, we're talking about investing, okay? Think about investing like putting a seed in the ground. Now, we would not put a seed in the ground, come out the next day and say, the thing didn't work. How stupid. So with investing, we know that there can be a lag between when we put it in the ground, the seed, and when it comes to fruition. So when someone invests, it's what they think it's going to do in the future. Not 2 days from now, not 3 days from now, not 4 days from now. It's what we think could happen in the future. Now, on the earnings, it's really to see, has that thought of, could the CEO change the business and could it change the fundamentals on the earnings? If it comes out with, hey, the company met expectations and so on, that's why the investor put the seed of capital in the ground to begin with. So earnings is typically harvest day because they already invested before. Now, the reason why I got married is because I thought when I went to my wedding day that, hey, it was going to be what I thought it was, right? That's why I made that decision to even be there. And so did Amber. So the biggest thing is people get confused is they think, well, hey, I had earnings, met expectation, and the stock didn't do anything. Or the stock went down. Earnings is typically payday for some investors. It is also the greatest likelihood where the investors sell because there's higher than above average volume and they got in already. Now, James, how come the stock sometimes goes to the upside then? It's when the stock releases information that the market had not factored in already, okay? And then all of a sudden, in this case, there's new information, and instead of people maybe selling as much, they might hold on to some, or new investors come in because new information is provided for future fundamentals or future forecasting of what they think the company is going to do, okay? So that's a little color behind. I think a lot of times people think it's like everything happens hey, I got in yesterday, the earnings is good, how come the stock went down? People have a lot longer holding time than that, okay? Especially if you think about institutional investors who are managing people's 401ks and so on. They're not buying a stock, selling it typically the next day for multi-millions of clients, okay? It'd be really difficult to do that. Now, what I want to do is also want to go back to just real quick, a couple stocks. Honeywell. Now, on Honeywell, if we go back to what we talked about, price above the 10-day moving average. Price recently made a high. Honeywell did that. There it is. How many red candles did we get? 1. What do we actually call that day? Close higher day. Close higher than what? Close higher than open. What did it do the very next day? What would the investor want to see? They want to see the gap open. If that stock actually gaps to the open, which it did, what happened? The gap open price was pretty much the low for the day so far. Now, does it always work like that? Absolutely not. But this one is right along kind of these main stocks, right in the Dow and in the S&P 100, that in terms of having a smaller watch list, they probably already saw it. Okay? Now, the other one to keep an eye on is Raytheon, RTX. So these industrial stocks, and they have not been hiding, right? The industrial area has exploded to the upside, and what you're really going to see is it went down for a day and it'll fire right back. Name some stocks in industrials that might be some brand new setups. John Deere, okay, popped to the upside, hit 531. But why does the stock pull back like this? It's a simple answer. When stocks get more elevated off support, some investors might think, well, geez, if someone was trying to get in, they might not be willing to buy that high off support. That does not mean, so when it's elevated off support. Someone might say, James, I'm going to try to sell some because we're elevated off support. Many investors like to use a moving average envelope of 3, 5, 7%. The higher percent we are off the moving averages, the more likely they might be warranted to sell. Now, if someone came to my house and said, I'll give you $2 million, I don't even have a sign in the front yard, but for $2 million, I'll probably sell it. Okay? This is the same thing with the stock. When stocks get elevated off support in the short term, some investors might sell some into that strength. Price comes down, gets a little bit closer to the moving averages, and then allows some other investors, if they're trying to get in closer to the moving averages where they're probably setting the stops below. Now, GE, tell me you saw that one. Because really, GE has been a horse, broke out, long shadow. Pull that tape measure out. And what you're going to see is the very next day, doink. Okay. Notice on the red candles here and here, notice the thinness of the body of the candle. That is something we hammered yesterday. Now, a lot of people say, yeah, but the color of the candle is red. Okay. Remember, sometimes people will say things to try to make themselves feel good that they didn't follow their plan. Fair? Fair. Okay. What happened the very next day? Doink, close above the high of the low day, and a little push to the upside. Okay? So now, now Luke. Oh, man. Now, the other one that's actually been kind of there as well is really GEV. Okay? GEV is right there as well. Notice that GEV is kind of like a little hammer off the moving average. That one might be the example of what we saw with Honeywell. Could that stock try to gap to the upside? Now, what I want to do just real quick is I want to bring up just real quick a couple stocks, and I want to bring up, if I can, I want to go back to just real quick AMD, okay? When we look at AMD, this has been an example that kind of got above, and I'm going to kind of go back to what we talked about, which is kind of the breakout, right? Now, we could say on this that we haven't had an open and close up, and I'm talking about a green candle that's above resistance on AMD. We haven't yet, okay? It rallies to the upside and then fades back, okay? Now notice, but we have the red candles though, right? Price is above the moving averages, check. Did we make a recent high lately? Check. That's number one, that's what we talked about. Second, where are the red candles? Uno, dos, okay? And now what the investor's probably trying to say is, James, could we, if this is the lowest, most recent red candle, if we start to trade above today's high, could this be something that gets a bounce right off the support area? Now, an investor is going to say, yeah, well, I'm going to wait until I see that, then I'm going to do something. Now, if the investor literally means that, well, that's fine. But sometimes we say things, and the question is, does the investor really follow through with their plan? Now, let's say the investor said, look, James, I'm going to sit here and watch it, see if it does it, maybe set an alert. But let's say we're going to do this, what we talked about yesterday. Let's do a buy stop limit, okay? Want to ingrain this habit. So let's think back for just a second. What is the investor looking for? Price above the 10-period moving average. Second, a recent short-term high. That was what we talked about. Now, with that, are there red candles? Yeah, we've got two of them. Okay, perfect. From the red candles, which one is the lowest? Today, what we're going to try to do is set a buy stop limit on the stock position. Right click right above that high. Now, you could take that high, and some investors, what they like to do is maybe set it a quarter above there, 50 cents. The problem with 20 or 50 cents or whatever it is, whatever you use, that might be dependent upon, if we did 20 and 50 cents on a stock like Booking Holdings, that's like nothing, okay? That's a couple $100 a share. Some investors, they like to do it by percentage. So if we said, look, today's high, if we looked and said, what's today's high? 117.50. Well, let's say we did 117.50, and what I did is I just added a percent to that. Well, that would be 118.67. So what I'm going to do is I'm going to go stop, limit, and what we're going to do is we're going to take today's high, 117.5, and we're going to times that by 1.07. It's now going to give us a price of 118.67. Okay? Now, if we come back to this, we're going to say 118.67. So if we go up to that price or higher, buy the shares of the stock. Now, in our example that we'll practice, we'll just make this where the buy stop and the buy stop limit is $1 apart. Why $1? Well, because we're trying to have a decent chance to get in. If this number and this number were like a dime apart, boy, I mean, it's like kicking a field goal and it's only 3 inches wide. Okay? We're trying to get in, but also trying to have that cap a little higher than the stop so there's a chance that it could get filled. Now, what happens if tomorrow it gaps to 120 and never comes back down again? It's not going to fill, or shouldn't. If we gap to 120, the limit was 119.67. So that's the bad side of this order. If it gaps to 120 and the investor's not watching it and it just keeps going up like a hot air balloon, yeah, this order was just kind of for naught. It just didn't, it gapped up too high and it never fell back down in between the field goal posts. Field goal post being 119.67 and the field goal post of 118.67. Has to fill in between there. Price has to get to that price or higher to get in, but no higher than that. Okay? Now, here's the thing. The investor could know about this. They could have heard about this, but it doesn't mean they practice it. So what I'm going to do is we're going to make practice of it. And if someone would have practiced this as of lately, they might have said, well, I got in some trades lately that might have had a potential recent trend. Now, what I'm going to do is I'm going to put a capital amount of $6,000. And if I did $6,000 there, how many shares is it? It is going to be ballpark 50 shares of stock. So once I know it's 50 shares of stock, I can just come out of this and just say, look, get 50 shares. Okay? Kind of does that little calculation for us. Now, what I'm going to do is we're going to say good till canceled. Now, that good till canceled could stay there for a while. Okay? Typically up to 6 months. So we talked about that yesterday. Maybe the investor wants to maybe put that out in time a little bit, maybe give it a week. We talked about yesterday. For time's sake, I'll just do GTC, confirm and send. No, got to know where the stop is. If the investor said, James, I want to set my stop underneath the 110.59, less 2%, which is the 20-period moving average, 108.37. Okay, 108.37. Now, also, if we went back on this, if that price went higher, the next level that it might try to go to, we don't know, okay? If we knew, we wouldn't position size. Hence, since we don't know, we position size, okay? So what we're going to do in this example is we're going to put a target right at about 132, okay? 132 there, okay? And now what we're going to do is confirm and send. And now what we see is there's the order. Got a target. We got to stop if it goes to that price or less, fill. The risk is that it could go to that price or lower. Now, in this case, let's kind of go back and look at that. Yeah, it's a buy stop limit order, and it's a GTC. Okay. Now, I want to kind of fast fire a couple stocks that maybe the investor might keep an eye on. We said yesterday, BlackRock. Did BlackRock get a little push yesterday? Yes, it did. Okay. Got above that 962 threshold, a little 14-point poke to the upside. Did QCOM actually get above that high? It did not. But what we actually have, what do we have? If we zoom in on this, we actually see two hammer-like candles trying to hammer out a support level. Did we get above the high of the low day? The lowest, most recent red candle, if we're talking about the last 4 days, above the resistance, is really the 512 day. We haven't done that. But keep an eye on QCOM. Could that start to follow Apple's lead? Okay. Now, also, I'm going to make mention of, let's say, Wells Fargo. You're going to see that's been a stock that's actually had a decent little upside lately, kind of trying to get a moving average crossover. Keep an eye. And we also said Raytheon as well. That is one that had two red candles, left a long lower shadow. Hammers do not have to be green candles, can be red as well. Doink, little gap to the upside, not much of a retreat, and there's not much of a lower shadow on that from today's open. So somebody was buying on the open and they didn't let it fall down so far. Now I'm out of my time here today. I want to kind of just make mention, you can go to the Schwab.com website, go to where it says learn, and you can go right to where it says Schwab Coaching. Let me share this link with you so that way you can bookmark it and see the upcoming classes, the live webcasts and virtual workshops right here. And we're going to be right on this day, and short verticals coming up next. Now, you're also going to notice that Brent with us is going to be doing the option strategy class tomorrow. That's Eastern Standard Time. And then Kevin and I can join Brent, okay, on that. And then also, I'll be teaching with Kevin tomorrow morning on the ETF class. This class is not recorded, okay? So I want to make sure that everyone actually comes there. If you say, I got a meeting at that time, push it back, tell them you got a class you need to go to, and join us live. Now, this class has also been recorded, and there's the playlist link for that as well. Now, I'm out of my time here today. I didn't want to be sick, wanted to kind of go do it anyway, and yeah, there you go. So try to give a valid effort here today. So with that said, remember with what we discussed here today was done for example, illustrative purposes only. Remember that also that all investing involves risk, and this has been the class on trading the trend, practicing kind of a follow through of what we talked about yesterday. Stay tuned for Connie coming up next with short verticals. Thanks so much. Take care. Bye-bye.